slew of positive economic news recently. Housing starts, the Consumer Price Index, and the Index of Leading Economic Indicators were all updated with fresh data through the end of April. While not gangbusters, all the data shows the economy is on an even growth path. The Consumer Price Index, better known as the inflation rate, was just 1.1% for the 12 months through the end of April. The low inflation rate is attributable to the major nosedive in gasoline prices in 2015. Another plunge like that seems unlikely in the months ahead, so it's better to look at the inflation rate excluding gasoline and food. Gasoline and food are the two most volatile components of the widely watched inflation rate, the headline inflation rate. Without gas and food, the core inflation rate was 2.1% for the 12 months through the end of April. This is in line with expectations of the Federal Reserve's growth forecast for the economy. So despite the low headline inflation rate, there is more inflation in the core that is on the way, and that is a sign the economy is growing according to the plan by the U.S. Central Bank. That's a good thing. And speaking of the Fed, the minutes of the Federal Reserve Board's April meeting were just released, and the Fed noted the economy's growth trajectory. The underlying inflation rate is already approaching the Fed's target, and the Fed suggested that another rate hike in June was possible. These are not signs of a slowing economy, and it appears the economy is about to get a material boost in the months ahead. The annual rate of construction starts on new residential houses is poised to boost U.S. GDP growth. A just-released report from the U.S. Census Bureau puts the annual rate of housing starts for the 12 months through April 2016 at 1.172 million. Based on data from the U.S. Census Bureau, that's well below the 1.5 million long-term mean annual rate of growth in housing starts. Housing is still recovering from the oversupply created in the economic boom and bust of the Great Recession. Housing starts are still reverting to their long-term mean rate of growth. Again, that is a good thing. Ultimately, demand for new housing stock in the U.S. is driven by our population growth. With a population of about 300 million, we need about 1.5 million residential new houses built annually to keep up. As we revert to the 1.5 million mean rate of housing starts, the ramping up in activity gives the economy a boost. You can actually see just how much of a boost the economy is expected to get. In April 2016, residential construction activity accounted for 3.4% of U.S. gross domestic product, GDP. However, as the annual growth rate of residential housing moves closer to its 1.5 million mean, housing starts will then generate about 5% of U.S. GDP activity. That's a 1.6 percentage point boost to the U.S. gross domestic product. Again, that's a good thing. With the newly released Index of Leading Economic Indicators jumping a sharp 0.6% in April, economic growth is expected to accelerate through the last half of 2016. That puts more money in people's pockets and makes corporate profits rise higher. A lengthening of the economic expansion is very good news for long-term investors, but the current financial environment is nothing like it's been for the last several decades. Past performance is really not a good indicator of your future investment results. So don't expect a portfolio filled with bonds to help you the way it helped your parents' portfolios. Amid all the good economic news, we want to remind you that in recent months, we entered a new era of gradually rising interest rates, and this may be with us for years to come.